Beef Market Update with Wasko on RealAgriculture.com is brought to you by Haney Farms. Shaun Haney here with RealAgriculture.com for another episode of the Beef Market Update. And who else would join us on the Beef Market Update but Wasko? Ann, how are you doing today?
I'm good, Shaun. How are you?
Oh, it's good. It's good to talk to you. Hey, today's a big day. Today's like a national holiday. What is today?
Oh, Shaun, today is National Cheeseburger Day. Did you not know that?
I did not.
Okay, well, there you go. You can say you learned something from Ann today.
Do we have special obligations on National Cheeseburger Day as Canadian beef producers?
Absolutely. I think most people do it anyways, but just make sure you got to squeeze a burger in somewhere today in one of your meals. That's all you have to do.
I will do my best. Yeah. I'll do my best.
Okay.
So today's theme is, what the hell? What's going on here? All of a sudden, it looks like the market has changed, and I quite frankly, I don't like it. What's happening?
Oh, well, with every season, it's frustrating, Shaun. The market, fed cattle market, still hasn't found its low, so it's certainly struggling, especially south of the border. So, of course, we're going to follow suit here. But certainly struggling to find its low. We thought we'd seen it back in July and tested it again in August, and we've blown through all those support levels now. So Kansas cattle yesterday or earlier this week, 135 to 136. That's another $3 to $4 drop. And again, like I said, we just haven't found the low yet. So cattle feeders have been in a negative margin, and we'll talk about going forward in a minute. But they've been in a negative margin scenario for a while in the U.S. and with these high replacement costs, they've been placing feeder cattle heavier, they've been feeding them longer, and what that all means as we come to the end of summer and into fall is we have record cattle weights. And I think Lindsay and I talked about this a couple of weeks ago, but both countries are running at record weights. And whenever cattle feeders kind of get them themselves in that corner, it means you lose bargaining position, you don't have that extra leverage vis-a-vis the packer. He's got that kind of that final say, if you will, and it's add that to all these uncertain outside global markets that are affecting the day-to-day. You just put more caution on the fire. So it's been a struggle. Markets have come off more than we were expecting, and like I say, we're still trying to find our low.
So is the undercurrent here a real bearish sort of tone based on, some of these, all of a sudden we've been talking about beef demand for, I don't know, I've been doing these for a long time with you. And let's say 3 years, we've been talking about, can beef demand sustain these higher prices? And now all of a sudden we've sort of, the light bulb's gone off. Maybe we won't.
Well, I think we better put some reality into this. So first of all, stand back. Margin operators, certainly we've got some negative margins going on, and it looks like negative margins going forward for a while, but we've got record retail beef prices still happening at the counter, okay? So there could be a double-edged sword there. And don't forget, we've still got feeder cattle and calf prices, albeit down from the highs of a few weeks ago. They're still well above last year's levels, and still the highest year that we've ever seen in history. So I think you have to be careful how you word it. Markets go up and down, and we're coming off our cycle highs. We're going to trade down, and that always feels bearish, obviously. But from a margin perspective, cow-calf producers are still going to have an absolutely fantastic year. Margin operators certainly getting slimmer to negative and looking into 2016. That's where the concern really starts to hone in for margin operators with big replacement costs and dropping marketing prices on the other side.
Yeah, when I have conversations with feed yards that are margin producers, the comment right away is, hey, last year was a really good year for our feed yard. This year we're managing to piss away everything, and that's really the frustration from the standpoint of being able to replace. We're at, you would know the more accurate numbers, but like $150 to $200 a head loss right off the bat. Dollar is really, to say it's good, to bet on the fact it's going to be lower is probably, most people would agree, a low probability bet. There is a lot of concern out there in terms of what some of these financial statements are going to look like for some of these feed yards, at least in this turn. And that's we're talking big money here.
Yeah, but Shaun, unfortunately, history says, and I kind of always got to go back and lean on history on this one. History says this is a pretty normal scenario. We make some money, and historically in the feedlot business, on a cash basis, cash in, cash out, it takes a couple of turns of losses before you really dig in and change the buy, if you will. And don't forget, we're talking about all of this in the face of the tightest, smallest cow-calf supply, feeder cattle supply that we've ever had in recent history, right? You got to go back well into the 90s and in the U.S. into the 50s to find cattle supplies this small. So you've got feedlots fighting that tight supply scenario in face of some negative margins. It's a tough spot to be in, but not something that it's easy to change.
Now, we've been talking about the margin producer. Let's jump back to the rancher for a second. Okay, so clearly this is a pretty good financial situation for the rancher. Let's be honest, but it has been this is recovering from a lot of years of a lot of losses. So let's be fair in that regard. Are we seeing enough money, enough jingle in the market for them that there's got to be some enticement to start this retention program at some point?
Well, I think, last year, and we've said this before, last year was really kind of that first year of, that big ticket, take the big check to the bank and pay down debt and do those kinds of things. And so this will be year two. And I do think we'll see some of it. But there's no question that, there's been a demographic in our business that has used this part of the cattle cycle to build his exit strategy on. So, time will tell. The feeling is there's been a few more heifers retained. We'll figure that out once we get right past this fall run. But again, that's a scenario out there. But really and we've got, the conditions of feed supplies and hay supplies from the dry conditions earlier this year that are still haunting the feed cost scenario for a lot of ranchers. So you've got a mixed bag out there as far as what position individual producers will be in. He's still going to be looking at taking more money home for his calves this year than last year, but he's probably in many cases looking at certainly a higher feed bill.
Well, and even on the feed yard side, I was in Ontario this week at the Outdoor Farm Show and had several different interviews with commodity analysts, and I'll tell you what, there is a bit of a bullish tone to corn, which as well adds into this whole equation of not a very good story for the cattle producer.
Let's leave that call to another call, because that could take a long time.
We will definitely do that next episode, and it was great talking to you. Look forward to hopefully we can do this in person sometime soon. Hopefully we'll run into each other in our travels and knock back a pint and do an interview. That'd be fantastic.
That would be great. Looking forward to it, Shaun.
Okay, well, there's a new McDonald's that's opened up in Coaldale down the road here, so maybe I'm going to head down there for lunch today and celebrate National Cheeseburger Day.
National Cheeseburger Day. Check out the new McDonald's and have a cheeseburger today for National Cheeseburger Day.
Perfect. Okay, Ann, thank you very, very much, and look forward to talking again soon.
Okay, sounds good. Thanks, Shaun.